Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Friday, the 18th of March. Starting off with Arkle, where it looks as though it's a second attempt at breaking to the upside. Clearly, you can see on the daily charts in September, 0.9 has been the resistance, but a bear trap below this month, or just in the last few days, below the February support at 0.7. Could be enough to take the shares over the top, over 0.9, and then on to a designated target there at an April resistance line projection from last year, as high as 1.6 pence. Obviously, the stop loss, recent lows, 0.6. Bumper news today from Bizant, and here it looks as though the shares are going to respond to that news. We've got a resistance line projection there from June, which targets 0.27. And it looks as though with today's news, we should head up to that area over the next week or two. RSI uptrend line there as well from back in October, and that should provide some momentum as well for the shares. Moving along to Conroy, which looked like a bit of a no-brainer type of technical setup there. We had the unfilled gap to the upside back in December, or rather in November. And that took the shares up from around 21p to 45. Same setup again with the unfilled gap to the upside over the last few sessions, and hoping that we'll get a retest of the mid-40s area as soon as the end of next month, or perhaps even sooner. But those unfilled gaps to the upside normally very reliable indeed. And the next stock is one that kicking myself a bit for not following up, just because it's relatively obscure, but we've had an island reversal, double island reversal. If you've got the double gaps to the downside, we had for DP Eurasia back earlier this month, and gapped up in the way that we gapped down, which is even more interesting. The old support there around 70 pence, so that's the initial target, while we hold above the latest gap at 58 pence, or around the 58 pence level. Ideally, though, we'd actually get much more on the upside, so an end-of-day close above 70 would take us back to the 90s area, which was post-October resistance. Moving along to a stock which has been quite a journey for holders, Gene Drive. Just starting to make some nicer noises at the moment, so you could say that this is a bull flag above the resistance line there from January. Still want to see the shares break the 50-day moving average on an end-of-day close basis. Unless they do that, it could still be just another full storm for the shares. But if we get above 20, then the road might be clear for a move towards that falling 200-day moving average at 33 pence. Stop loss at the moment, I suppose, just around 15 pence, or just below that is about the best you can do if you have appetite for that situation. Crops is next, and I believe there was a good announcement today. Here we've had an island reversal for December, and unfilled gap to the upside, which, as I said, can be a very reliable signal. We've got a gap close. If we close above the latest gap down at 8.4 pence today, so above that, still the chance for the shares to head towards the top of the rising May trend channel at 16 or 17 pence by the end of next month. Only really back below 6 pence, killing the idea of recovery there at Crops. You can see that there's a bit of a dance either side of that old September peak around 9.5 pence, so that needs to be broken too. Onto a stock which might have the award for one of the least liquid situations at the moment. Neo Metals. If I can get the shares to appear on this particular chart, here we've got it now. And I said before, we had an initial range between 72 and 86 pence. We've broken that range with a gap. And so the upside here could be equivalent to the form of a range of 14 pence. So 14 plus 86 is £1. And maybe we'll get a bit more than that as well for Neo Metals over the next 2 weeks or so. On to one of the big rises of the day, which is N4 Pharma. Rises of yesterday, I suppose, and today. Here we've got a situation where we're just toying with the 50-day moving average around 3 pence. So we're going to get an end-of-day close above that, which we might over the next few days. Then 4 pence at the top of that broadening triangle from January could be the destination for the shares. Obviously, it's been a bit of a torrid ride there. We're also backed by an uptrend line, a bullish divergence line there in the RSI window from January, so that gives us the hope that 4 pence could be hit, even if that is the limit of the rally over the near term. Stock that I wish I'd another one which I'd covered a bit more is Optibiotics. Obviously, it's not been the world's greatest stock in terms of the price action or perhaps even the fundamentals, but key reversal to the upside yesterday with a higher low at the 30 pence level, above the floor of the overnight gap at 35 pence. See the shares head up to the 200-day moving average and post-December resistance at 46 pence, so looking a bit more lively there. We also have bullish divergence, or at least a rising RSI line there from back in November, which obviously explains the sudden surge in momentum for the shares to the upside as a potential recovery situation. Still beggars belief that an estate agent has difficulty performing well in current market conditions, but Purplebricks has not covered itself in glory over the recent past. But what's interesting now is that we do have a bullish divergence with the lower low for March versus the lows that we had in November. So that's a plus. We've also managed to break above the 50-day moving average at 20.5 pence, or 20 pence rather. And above that, the target here could be to fill the gap from December up to 30 pence over the next couple of weeks. And the overall picture here is that while we remain above the 50-day line, we could head up towards the 50-day moving average at 46 pence as a best case scenario. But at the moment, probably the upper 20s is the more realistic destination for the shares now that they appear to have bottomed out. Decent news yesterday for RGO with DeepVerge, and here you can see that it looks like the shares have bottomed out around the 107 level. A bit of bullish divergence coming in there as well, with the RSI trace starting to tick up even though the price remained the same. View now is that we could at least head towards the area of the 200-day moving average at 1.39 pence while we're above 107, and maybe that will then bring in a more sustained recovery for the shares, which have been rather quiet over the recent past. On to Union Jack, which I have covered a few times, maybe belatedly. Here we had the start of the rally with an unfilled gap to the upside. That was back in December, worked very well. Also got an uptrend line in the RSI window. Current situation is that we've got that line of resistance around 28 pence. End of day close above 28 could lead the shares up to the early October resistance line projection at 38 pence, maybe by the end of next month, something like that. But we are in recovery mode here, at least while we're above the 200-day moving average at 22. And hopefully that will guide the shares higher over the near term. That's it for me today. More updates over the weekend.